We will still continue with single and incomplete records, and the specific objectives for this lesson is to apply the following techniques to arrive at the missing figures. The missing figures are markup, margin, and inventory turnover. Now let's have a look at markup. Markup is gross profit shown as a percentage of the cost price, and the formula to calculate markup is equal to your gross profit divided by your cost price, and this is always shown as a percentage. So when you hear the words markup, you have to think of the cost price, which is the cost of sales. Now let's have a look at the formula and break it down. This formula can also be restructured if you want to calculate the gross profit. What you then need to do is restructure the formula to say cost price multiplied by markup will give you the gross profit, or gross profit is equal to cost price multiplied by the markup. Let's have a look at an example of commodity stores. The information below was extracted from the books of commodity stores for the year ended 31 May 2017. Inventory at 1 June 2016 was 7,800, purchases was 31,500, cost of sales was 36,000, and the business applied 20% markup all the goods sold during the year. So what we need to focus on here is our cost of sales of 36,000 and our markup of 20%. Now let's go do some calculations. Now we need to calculate the figures for commodity stores for the year ended 31 May 2017. We need to calculate the gross profit, the sales, and we need to calculate the closing inventory. Now the best way to do this, to calculate our gross profit, our sales, and our closing inventory, is in our trading account of our income statement. So let's go check that out. So as we can see, we have a trading account, but it's incomplete. It's missing some figures. It does not have the sales, it also does not have closing inventory, and it doesn't have the gross profit. Now let's use our formulas in order to determine those values. So let's start off with our closing inventory. We would say 39,300 less what will give us 36,000, because 36,000 is our cost of sales, and we can swap that formula around to say 39,300 less the 36,000, which is the cost of sales. That will give us 3,300. So our closing inventory will be 3,300. The next amount we should find is our gross profit. How would we do this? Well, we'll take our cost of sales and we'll multiply that with our markup. That will give us our gross profit. So we have our cost of sales and we have our markup that's been given in the notes. And if we take 20% of 36,000, that will come to 7,200. And so we can add that for our gross profit. The last amount that's left to calculate is our sales, and this one should be relatively straightforward. What you need to do here is say what, which is sales, less our cost of sales, and that will give us our gross profit of 7,200. And again, you can just swap this formula or rearrange this formula. So we can say 36,000, which is our cost of sales, plus our gross profit, which is 7,200, and that will give us our sales figure, which is 43,200. So remember, when you get a question like this, always start at your gross profit and work your way back.